Ever wondered who keeps the money flowing, who ensures that the financial gears keep turning smoothly, and who steps in when things start to go awry? Who makes sure banks don't go rogue and start making risky decisions that could jeopardize your savings? Say hello to financial agencies, the often overlooked heroes of the economic world. These institutions are the backbone of our financial system, working tirelessly behind the scenes. They're like the referees of the financial system, making sure everyone plays by the rules and the game doesn't descend into chaos. Just like in sports, their presence is crucial for fair play, from setting interest rates to overseeing stock markets. These institutions play a vital role in keeping our economies stable and somewhat predictable. They monitor financial activities, enforce regulations, and step in when things go wrong. Think of it like this. You wouldn't want a football game without a referee, right? The game would quickly spiral out of control. It would be a free-for-all with no clear winner and a lot of angry players. The same goes for the financial world. Without these agencies, it would be a chaotic mess. Financial agencies are kind of like that referee, ensuring fair play and preventing things from getting too out of hand. They provide oversight, guidance, and sometimes even penalties to keep everything in check. They might not always get the calls right, but they're essential for maintaining order in a complex and often chaotic system. Without them, the financial world would be a much riskier place for everyone involved. First up, we have the big dogs, central banks. These institutions are the powerhouses of the financial world, wielding immense influence over the economy. These institutions are like the conductors of an orchestra, setting the tempo and rhythm of the economy. Just as a conductor ensures that every instrument plays in harmony, central banks strive to keep the economic symphony in tune. They control the money supply, set interest rates, and act as lenders of last resort when banks need a financial lifeline. By adjusting these levers, they can either stimulate economic growth or cool things down to prevent overheating. In the US, we're talking about the Federal Reserve, or as some like to call it, the Fed. This institution is pivotal in shaping the economic landscape of the country. They're the ones making those big decisions that affect everything from your mortgage rates to the value of the dollar. Their policies can influence how much you pay for a loan or how strong the currency is on the global stage. Now, central banks don't always get it right. Despite their expertise, they are not infallible. Remember the 2008 financial crisis? That was a stark reminder of how even the most powerful financial institutions can falter. Yeah, that was partly due to some questionable decisions by central bankers. Their missteps had far-reaching consequences, affecting millions of lives. But for the most part, they play a crucial role in preventing economic meltdowns and keeping things relatively stable. Their interventions can be the difference between a minor economic hiccup and a full-blown crisis. Think of them as the adults in the room, trying to keep the financial system from going off the rails. They are the steady hands guiding the economy through turbulent times, ensuring that the financial system remains robust and resilient. Next, we have the rule makers, regulatory agencies. These guys are like the hall monitors of finance, making sure everyone follows the rules and no one's pulling any funny business. They oversee banks, insurance companies, and other financial institutions, ensuring they're not engaging in risky behavior that could trigger a crisis. In the US, you've got the Securities and Exchange Commission, SEC, keeping an eye on the stock market, and the Consumer Financial Protection Bureau, CFPB, looking out for everyday consumers. These agencies might seem boring, but they're essential for preventing another Enron or Lehman Brothers situation. They're the ones who are supposed to spot the warning signs and crack down on bad behavior before it blows up the entire system. Sure, they don't always catch everything, but they play a vital role in maintaining trust and stability in the financial world. Now let's talk about the do-gooders development banks. These institutions are all about promoting economic growth and reducing poverty, particularly in developing countries. They provide loans, grants, and technical assistance for projects that improve infrastructure, education, and healthcare. Think of them as the investors in a better future, trying to level the playing field and give everyone a chance to prosper. One example is the World Bank, which has funded countless projects around the world. from building roads and bridges to supporting education and healthcare initiatives. These banks might not grab the headlines like central banks or regulatory agencies, but their work is crucial for creating a more equitable and prosperous world. Section 5. International Financial Agencies, Global Cooperation for Economic Stability. Last but not least, we have the Diplomats International Financial Agencies. These organizations promote cooperation and coordination among countries on economic and financial matters. They provide a forum for discussing global issues, sharing best practices, and coordinating policies to prevent crises and promote stability. Think of them as the United Nations of Finance, trying to keep the global economy from descending into chaos. The International Monetary Fund, or IMF, is a prime example. It provides loans to countries facing balance of payments crises and offers policy advice to governments. These international agencies play a crucial role in fostering cooperation and preventing economic nationalism from derailing the global economy. Section 6. Impact on daily life. You might be more reliant on them than you think. Okay, so we've covered the different types of financial agencies, but how do they actually affect your life? You might be surprised to learn just how intertwined they are with your daily activities. You might not realize it, but these institutions play a role in your everyday financial decisions. From the moment you wake up and check your bank balance on your phone, to the time you make a purchase at your favorite coffee shop, financial agencies are at work. From the interest rates you pay on your loans, which are determined by these agencies, to the stability of the financial system that allows you to withdraw money from an ATM without a hitch, financial agencies are working behind the scenes to keep things running smoothly. They ensure that the financial infrastructure is robust and reliable. Remember that time you bought something online and it arrived safely at your doorstep? That seamless transaction is partly thanks to the stability and security provided by financial agencies. They implement security measures to protect your online payments, making sure your personal information stays safe. They help ensure that transactions are processed efficiently, whether you're buying groceries or booking a flight, and that your money is protected, whether it's in a savings account or an investment portfolio. So the next time you swipe your credit card or check your bank balance, remember the complex network of financial agencies working tirelessly to make it all possible. Take a moment to appreciate the often invisible hand of financial agencies. They are the unsung heroes of our daily financial lives, ensuring everything runs smoothly and securely. Section 7. The challenges ahead. Navigating a complex and evolving landscape. Financial agencies face a constantly evolving landscape of challenges. Globalization, technological advancements, and geopolitical risks all create new complexities for these institutions to navigate. They need to adapt to the rise of cryptocurrencies, fintech companies, and the increasing interconnectedness of the global financial system. One of the biggest challenges is striking the right balance between regulation and innovation. Too much regulation can stifle growth and innovation, while too little can lead to excessive risk-taking and instability. Financial agencies need to find that sweet spot to ensure a stable and thriving financial system. Section 8. The future of finance, adapting to new realities. The financial landscape is constantly evolving, and financial agencies need to adapt to keep pace. They need to embrace new technologies, such as artificial intelligence and big data, to improve their ability to monitor risks, detect fraud, and ensure compliance. They also need to foster greater international cooperation to address global challenges, such as climate change and cybercrime. The future of finance will be shaped by how well financial agencies can adapt to these new realities. They need to be proactive, innovative, and collaborative to ensure a stable, fair, and efficient financial system for everyone. Section 9. Conclusion: a system worth understanding. In conclusion, financial agencies might not be the most glamorous institutions, but they play a vital role in our economic well-being. They're the unsung heroes who work tirelessly behind the scenes to keep the money flowing, prevent crises, and promote growth. Understanding how these institutions function and the challenges they face is crucial for anyone who wants to navigate the complex world of finance. So the next time you hear about central banks, regulatory agencies, or international financial institutions, don't just tune out. These organizations might seem distant and complex, but their decisions have a real impact on your life. By understanding how they work, we can all be more informed citizens and contribute to a more stable and prosperous future.